back. Previously we were discussing about various application level cases of cash flow statement. So let us discuss some of the adjustment cases that comes under preparation of cash flow statement. Next case, the balance sheet of Star Limited is given below. It is almost, the question will be almost similar to a fund flow statement. The only concept is the statement and format is different. This is a comparative balance sheet. Just go through the items given in the balance sheet, familiarize each item. The treatment of each item will be almost similar to this treatment which we have made in case of fund flow statement. And in the adjustment, the additional information given in the cash flow statement and its treatment is almost similar to the fund flow statement also. So let us go directly to the preparation of cash flow statement. In the additional information, there are 3 points. On the basis of those information, we will be preparing various non-current accounts. So on the basis of the information, let us first begin with trade investments, because in the adjustment it was said that 4,000 was received as dividend on investment, including 1,000 received out of pre-acquisition profit, which was credited to investment account. We have dealt a similar type of question with the same adjustment pattern in the fund flow statement. The same method and the principle is followed in case of a cash flow statement. The only difference is the preparation of statement is quite different from the fund flow statement, but the principle and the concept is almost same. So let us begin with trade investments. We will begin with its opening balance as well as closing balance, because in the question investment is given 70,000 and 80,000, and in the adjustment it is said that 4,000 was received as dividend on investment, including 1,000 received out of pre-acquisition profit, which was credited to investment account. So let us note down the received amount which was credited to the investment account, 1,000, because in the adjustment it is specified that 1,000 is credited to the investment account. So by adjusting 1,000 to the concerned side of the investment account, you can see that there is a difference of certain amount in the left hand side while comparing the total amount with its contents on the respective sides. So there is a difference of amount in the left hand side, that means purchase. Since it is an asset, usually the difference in the left hand side represents a cash purchase or a bank purchase, whatever it is. So trade investment is over. Next you have to prepare plant and machinery, because here depreciation of plant and machinery is given. So let us begin with opening as well as closing balance of machinery. Opening is 60,000, closing is 1,40,000, and in the information it is said that depreciation on plant and machinery was 20,000. So after adjusting all these, we can see that the total amounts of both sides is 1,60,000, because we have taken the biggest amount of the right hand side. So there is a difference in the left hand side that represents to back, or otherwise known as purchase. I hope you know all these steps, because we have done the similar pattern in the case of fund flow statement. So just go through it. And next one, in the question it is said that premises was revalued during the year and the profit on revaluation was credited to capital reserve. So since it is an additional information, do we have to prepare an account? No, because in the balance sheet you can see that premises in the opening balance is 1 lakh, closing balance is 20,000. So there is a revaluation of premises as per the adjustment. It is correct. 20,000 rupees was the revalued amount, because 1 lakh is changed to 1,20,000. Now 20,000 was the revalued amount, but the revalued amount was transferred to capital reserve. See, if we go to the capital reserve, you can see that there is a different amount of 20,000 by the end. That is, this 20,000 was transferred to capital reserve, and we have learned that only a transaction that has one non-current and another current item, such transactions are considered as the flow of cash or flow of fund. Since this transaction has only non-current items and no current items is specified in the transaction, that transaction cannot be considered as a flow of cash item. So that adjustment is neglected, just like the adjustment which we have done in the case of a fund flow statement. In the fund flow statement also we have neglected the same adjustment because the principle was the same. The same concept is followed in this case also. So let us begin with preparation of cash flow statement because we have prepared all the non-current accounts. So this was the question and this was the non-current accounts. So let us begin with preparation of cash flow statement for this year specified in the question. We will begin with net profit during the year. So let us begin with net profit for the year. In the question you can see that profit and loss account is opening balance 70,000, closing 66,500, and remember you need to take the difference from the second year minus first year. Remember that the profit and loss balance of the closing minus opening, you have to do like that. So 66,500 minus 70,000, you will get a negative balance, that is during the year the business sustained loss. So minus 3,500. From that you need to add back non-operating expenses. Let us begin with non-current accounts. Here there is one non-operating item by depreciation 20,000. And if you go through the question part, you can see that there is no items in the liability side. In the asset side, there is a goodwill, reduction in the value of goodwill, so it is considered as intangible asset written off, which is a non-operating expense, so it is shown in the non-operating items side. And non-operating income credited to P&L account. Here in the adjustment it is said that 4,000 was received as dividend on investment, including 1,000 received as pre-acquisition profit, which was credited. So out of 4,000, 1,000 was credited to the concerned asset account. So the remaining amount was 3,000. So 3,000 is a non-operating income, so that amount has to be deducted. So 3,000 is taken here. So after adjusting that, you will get an amount of 18,500, which is considered as cash operating profit before working capital change. So next step is you need to adjust various changes in the working capital items, mainly current assets and current liabilities. You add back decrease in stock of finished goods and decrease in debtors because these are current assets. Decrease in current assets is considered as flow of cash. Inflow, basically inflow of cash. So decrease in stock is 14,000. Stock of finished goods is 14,000 and decrease in debtors is 8,000. So that is shown here. After that you need to adjust the next set of item, that is increase in current assets and decrease in current liabilities. Here increase in stock of material, there is, see the in the beginning it was 14,000, by the end 22,000, so the difference is shown here. And in the liability side creditors, there is a decrease in creditors, the difference is shown here. So the cash from operations was 24,000. From that you need to deduct income tax. Since there is no income tax in the given in the question, let's leave it like that. So the net cash flow from operating activity is 24,000. Next, second part is cash flow from investing activity. Basically we will go through fixed asset items and also consider some of the extraordinary items like dividend received on investment, income tax refund, and likewise. So let us begin with first one. We have prepared a plant and machinery account where there is a purchase of rupees 1 lakh. So 1 lakh has to be shown within the bracket because it is an outflow of cash. Next one, if you go to the balance sheet, you can see that there is an trade investment is an fixed asset and we have prepared an account for the investment. So if you go through it, you can see that there is a purchase of rupees 11,000. It is a cash outflow, so it has to be shown in the brackets. Next one, dividend received on investment, as it has been mentioned in the adjustment, 4,000 was received as a dividend on investment, so the full amount has to be shown in the statement as 4,000. So if you adjust all these three amount, you will get a net cash outflow of 1,07,000 from investing activity. So since it is a negative value, you have to show it within the brackets. So once you found the cash flow from investing activity, next one, cash flow from financing activity. The financing activity, we will basically go for fixed liability items. The balance sheet, if you go through it, you can see that there is no change in the equity share capital, but in case of preference share, there is an increase of 1 lakh. So it is a inflow of cash. So it is a positive value, 1 lakh rupees. So there are no other information regarding financing activity. So you can close that part. And finally, you need to add back all these three amount: net cash flow from operating activity, net cash flow from investing activity, and net cash flow from financing activity, and you will get an amount 17,000. And from 17,000, you need to add back opening bank balance. Since there is bank overdraft, you need to deduct the opening balance of bank overdraft from the concerned amount. So 17,000 plus 2,000 minus 30,000, you will get minus 28,000. And if you check the closing balance of cash, there is 4,000. Bank overdraft 15,000. So the net effect will be minus 11,000. Okay. So the closing cash balance is minus 11,000. So here you have the total cash flow during the year is 17,000. From that you need to adjust this minus 28,000. So you will get an amount 11,000, which is equal to adjusting bank overdraft as well as the closing balance of that. So this is how you have to prepare a cash flow statement. I hope you understand the concept. Since we have dealt the similar pattern and similar type of adjustment in fund flow statement, we will be dealing with each cases in a fast pace. So let us try another case regarding cash flow statement. Balance sheet of M Limited is given below. You are required to prepare a cash flow statement for the year ended concerned date. If you go through the items, you can see that all the items are almost familiar to everyone. Provision for tax is given, and the adjustment provision for tax made during the year. Goodwill, in the beginning there was nothing, by the end there was 5,000. So increase in intangible asset is a purchase. But before confirming that, just go through all the adjustment and informations. And in the adjustment, it is said that depreciation on building is 2,000, plant and equipment is 8,000. Equity share was issued for purchase of another business. That adjustment is a very tricky one. Usually that adjustment always include a hidden information. So equity share was issued for the purchase of another business. Equity share, here in the question there is only share capital, and in the beginning it was 1 lakh. By the end it was 40,000. So it means during the year 40,000 shares was issued, and equity shares were issued for the purchase of another business. So that 40,000 might have been issued for the purchase. And for issuing the shares, we have bought certain assets such as plant 20,000, stock 15,000. So if you go through the amounts, you can see that there is some mismatch, because here the difference was 40,000. Here the different amount is 20,000 plus 15,000, 35,000. These two amounts must tally, but on the basis of details given, there is a mismatch. So the mismatch may be due to some hidden information. We will come to that part. Provision made during the year. So remember to place the amount in the appropriate position. Additions of plan. Okay, almost all the adjustment has been dealt in the fund flow statement. Let us go with the preparation of cash flow statement. First, let us prepare various accounts so as to identify the various hidden informations. Let us begin with share capital account. In the question, it is said that equity shares were issued for the purchase of another business. The assets consisted of plant and stock amount is given. So first of all, let us identify the share capital issued during the year and whether the same shares has been used for purchasing the concerned asset. During the year, shares issued was 40,000 and the same 40,000 was used to purchase plant 20,000, stock 15,000. There is no other information regarding assets. But if you go to the amounts, you can see that here it is 40,000, here only 35,000. So there is a difference of rupees 5,000 during the year. The company has already made the purchase, but there is a difference of 5,000 is not mentioned in anywhere else. So we can assume that the difference amount 5,000 is considered as goodwill. It will always be the case like that. Whenever there is a difference in the purchase regarding the issue of shares and the difference between the purchased items, it means the difference amount will be goodwill. And remember, here the goodwill is 5,000. If you go through the balance sheet, you can see that goodwill in the beginning there was nothing, but by the end there was 5,000. So definitely this 5,000 is the same amount returned by the end of the year. So let us go with the preparation of share capital account. Before going into that, there is one thing. In the adjustment, it is said that the concern has issued certain shares to purchase plant and stock. Stock is rupees 15,000. Since the stock comes under the current asset part, you need to exactly identify the stock acquired during the year. So in the question, it is said that inventories opening balance is 64,000 and closing balance is 82,000. So during the year, inventories or stock purchased was 18,000, and in the adjustment it is said that about 15,000 rupees worth of stock was purchased by the issue of shares, but as per the balance sheet it is 18,000. So in the case of inventories also there is a mismatch of amount of rupees 3,000. So we can assume that additions during the year of rupees 3,000 is hidden in the statement. So 3,000 has to be considered. So let us prepare other non-current accounts, provision for tax as well as plant and equipment. So let us begin with share capital. Opening balance is 1 lakh, closing balance is 1,40,000, and in the adjustment there is a purchase. So certain shares were issued to purchase plant 20,000, stock 15,000. There are no other information regarding share capital. So let us take the totals. You can see that there is a difference of certain amount in the right hand side of the share capital. So it can be considered as goodwill. We already dealt that adjustment just now. So let us go to another account, provision for tax. We all know the drill of preparation of provision for tax. Given opening balance and closing balance has to be shown accordingly, and in the adjustment it is said that provision made during the year 16,000. So it has to be shown by P&L 16,000. So provisions always made on the base of profits. So it has to be shown in the P&L account. That's why it is written by P&L. The difference in the provision for tax is about 18,000. So that will be the tax paid during the year. Remember, here tax made during the year, it is a non-operating item. Here tax paid during the year, it is a payment. These two amount has to be taken while preparing net cash flow from operating activity. So let us prepare another account, plant and equipment. Let us begin with opening as well as closing balance 90,000 and 1,20,000. And it is said that during the year plant was purchased by issue of shares. So let us write down. And also it is said that depreciation during the year was 8,000. So let us note 8,000. And during the year 20,000 worth of plant was purchased by issue of share capital. And by balancing the account, you can see there is a difference in the left hand side. Since it is a fixed asset, that difference can be considered as purchase. And one more thing, in the adjustment it is said that depreciation provided on building is 2,000. So definitely we have to prepare an account, but for this question we are not preparing the account. The reason is That is common logic because opening balance is 40,000, closing balance is 38,000. So there is a difference of 2,000 is there. Usually we assume that whenever there is a difference in the asset, mainly fixed asset, it is considered as a sale. Since building cannot be sold out part by part, we can sell or sold out a building as a whole or nothing else. We can't sell a building like a certain room of a building to someone else, or a certain, we can rent out certain rooms or floors, but we can't sold or we can't sell a room or a floor of a building. So here the difference between the building of rupees 2,000, it is a small amount, so we can't consider it as a sale, and in the adjustment it is said that there is a depreciation of rupees 2,000. So the common sense, by common logic, it is implied that this difference of 2,000 is actually the depreciation 2,000. So for showing that, you need not have to prepare an account for building. It's up to your discretion. You can either prepare or you don't have to prepare, whatever it is. And preparation of accounts is mainly for computation purpose only. Okay, so let us prepare with the cash flow statement. We will begin with preparation of cash flow statement. First of all, profit and loss account during the year. Net profit for the year, 56,000 minus 59,000 minus 3,000. Here also there is a loss of rupees 3,000. Next one, add transfer to general reserve, since there is a general reserve and the difference amount is considered as transfer to reserve. Next one, non-operating items. Let us begin with first one, depreciation. Plant and equipment, there is a depreciation of 8,000 and no other items in the plant and equipment account. Next one, depreciation on building and plant and equipment is shown. Next one, discount on debentures written off. Discount on debentures written off 2,000. Actually there was an adjustment of which was left out in the question part. The adjustment is like this. During the year, debentures was redeemed at a discount of rupees 2,000. That adjustment is not shown in the additional information. That is actually an adjustment. For the time being, just remember that. So the discount on debentures has to be shown as a non-operating item, so that is shown here. Next one, provision for tax. In the account it is 18,000 and 16,000, so definitely 16,000 has to be taken. By adjusting that, you will get the cash operating profit during the year is 35,000 before working capital change. Now you need to adjust various working capital items such as decrease in sundry debtors had to be add back, increase in sundry creditors has to be add back, and after that you need to adjust increase in inventories and see during the year the opening balance was 82,000, closing balance was 64,000, and during the year 15,000 was also acquired by issue of share capital, and the remaining 3,000 was the store acquired during the year, which was an hidden information. So that is has to be shown in the concerned position. Next one, increase in bills receivable 5,000, decrease in bills payable 1,000, and finally by adjusting all these items you will get the cash flow from operating activity. Remember, here income tax has to be considered, and regarding the income tax, here the provision for tax made during the year 16,000 has to be taken, and here the tax paid during the year has to be taken. So once you adjust that, you will get net operating profit, net cash flow from operating activity of rupees 29,000. Next one, cash flow from investing activity. Mainly you have to go through the asset side, and we have already prepared a plant and equipment account. In that there is a purchase of 18,000 that has to be shown. There are no other information regarding any of the fixed assets, so let us close cash flow from investing activity minus 18,000. After that, cash flow from financing activity. Here, if you go through the share capital account is already adjusted, so no other information has to be taken. And next item is debentures. There is an adjustment regarding that. During the debentures was redeemed at a discount of 2000. Here the opening balance is 50,000, closing balance is 30,000. So the debenture amount is 20,000. So that amount has to be shown. Because why we are not adjusting the discount is already adjusted in the case of net cash from operating activity. So once you have found all the three heads, you need to add together all amounts after adjusting the negative values. So you have got minus 9,000. From that, you need to adjust cash at bank. So opening cash balance is 21,000. By from 21,000, if you adjust the 9,000, you get the closing cash balance of 12,000. See, 12,000. And if you go through the items and adjustment, you can see that almost all the items has been dealt in different situations in the case of fund flow statement as well as cash flow statement. The only adjustment that has to be kept in the mind that here in the question there is no information regarding debentures redeemed during the year. The only information we have is debenture opening balance and closing balance. And another information given in the question is discount on debentures during the year is 10,000 and 8,000. So it is implied that during the year there is a discount on debentures reduction of rupees 2,000, that is 10,000 minus 8,000, 2,000. And here in the liability side, the opening balance is 50,000, closing balance is 30,000. So the actual activity is that during the year there was a redemption of debenture of rupees 20,000, and by the redemption of debentures the concerned has earned some discount on such redemptions, and it was rupees 2,000. But nothing is mentioned anywhere in the adjustments. The only information is debentures opening closing balance and discount on debentures opening closing balance. So you have to understand that such a transaction was happened during the year. On the basis of these opening balances and closing balances, you have to do the adjustments accordingly. Here discount on debentures has to be considered, and we have considered it in the case of preparation of cash flow from operating activity. And regarding the debentures, since it is a fixed liability, you have to adjust that item in the case of financing activity. That is the concept of preparation of cash flow statement regarding various adjustments relating to hidden items. So just go through the various cases, understand, familiarize each item, and try to work out more problems that is shown in your textbook. Since we have done almost all the cases in the fund flow statement, we are not going to repeat the same pattern here. Try to work out all the questions, and if you have any issues or queries, please let me know. And apart from all these items, just go through the text and identify and understand the difference between cash flow statement and fund flow statement. Since we have learned both the case statements, just go through the theoretical part and try to identify the merits and demerits of cash flow statement. It has been properly stated in the text, just go through it. If you have any queries, please let me know. Apart from the points given in the text, try to identify and point out the various merits and demerits of cash flow statement from other sources also. So let's go through the various cases. We will discuss about the next module in the next section. Thank you.